So today we're talking about student loans and how it affects your ability to get a mortgage and buy a house. Student loans will affect your debt to income ratio, or your DTI. And if you're not familiar with that term, DTI is just your total monthly debts divided by your total income. So on the debt side, I'm looking at, say you got a car payment or credit cards, or if you owe child support, your new house payment, and then of course any student loans, which we'll discuss in a little more detail here in a second. Things that I don't need to count on the debt side are going to be utility bills, cell phone, cable, insurance, stuff like that I don't need to count with your debts. On the income, I can only count verifiable income. So if you have a job that you work and you make a little cash on the side, or you get some tips that you maybe don't report to the IRS, more power to you, but I can't count that for debt to income purposes. So I'm counting your gross verifiable income, your income before taxes. And so my target's going to be about 45 to 50% of what you make every month that I should be able to qualify you for your new payment. And so I'll give you an example of that here in a second. But I'm going to pause there and discuss, again, student loans. Let's say you've got a $20,000 student loan. It's deferred. You don't owe anything on it for the next 3 years or whatever. I still have to hit you with a 1% payment for qualifying purposes. So it doesn't mean you need to pay it. It just means that for qualifying, let's say you owe $20,000, I have to hit you with $200 a month for my calculation here. So going back to our example, let's say you make $60,000 a year, so that's $5,000 a month. And make it easy math, we're going to say 50% is your max debt to income. So $5,000 a month times 50% is going to be $2,500. And so let's say you have a $350 car payment and $100 minimum payments on your credit cards, and you got that $20,000 student loan. Again, I'm going to hit you with $200. And so $2,500 minus $350 minus $100 minus $200 leaves you $1,850, and that's your max mortgage payment. This doesn't mean that's what you can afford. That's just what I should be able to qualify you for. Only you know what you can afford in your budget. And of course, the next question, what does $1,850 a month buy as far as a house? It's really hard to say in a short video like this. It's going to depend on taxes, HOA dues, down payment, what are the current interest rates. And so we'll discuss that probably in the next video. I hope you found this information helpful. Of course, if you have any other questions, feel free to leave them in the comments below.